Hello. Welcome to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. It's been a few days since we spoke. I was going to make a video over the weekend, but I became very ill and wasn't feeling up to producing a video at the quality that I would like. Yesterday, when I sat down to produce the video that I had put off over the weekend, our data provider Glassnode was down and I wasn't able to load any of my charts. So alas, here we are on Tuesday, ready to hit the charts and see what we've been missing. I appreciate your patience with me over the last few days. If you enjoy this content, make sure to give my video a thumbs up and subscribe to the channel. If you hit the bell icon next to the subscribe button, you'll find out about all of my videos the moment they come out. I really appreciate your support, but I've kept you waiting long enough, so let's get right into the charts. Let's start out looking at the price chart. So the other day when we talked, it was November 17th and we were right around here. And the thing that we were looking at was price weakness. And we were wondering if maybe price would come down and test the bottom of this channel that had been developed. We also noted that the previous high here on September 7th on El Salvador's Bitcoin Day was right around 53,000, which matched around the bottom of the channel. And it looked like an area that should hold support from a technical perspective if we were to stay in a positive bull market here. Ideally, we wouldn't see price break below and test these lower prices, 50K and below that. That would be a bit more concerning. It wouldn't invalidate our bull thesis immediately because we use a lot of data from on-chain to build that thesis. But purely from a price perspective, getting below this level would be a sign of weakness and something to be concerned about if it were to stay below this level. A wick, a brief dip below, not a concern. But if the candles start forming down below this yellow line here, our thesis will be tested. But while we're hanging out in this area, what we really need to see is what is the spending behavior on chain of the various participants in the market. That will give us an idea of how close we are to seeing some kind of a bounce price-wise. Here's our spent volume age bands. We watch this chart very often. This is the spending of coins on chain every day by their ages. And shown here, these are only coins that are 3 months or older at the time they were spent. We've been watching this chart to see if there was going to be a spike of older coin activity at the new highs that we set in October. We did get that spike of activity, and it has receded since. We haven't seen another burst of older coin selling. They got it out of their system here at the end of October when the new all-time high was first created. We even created a second one in early November and did not get a second spike of older coin spending. It's all part of this initial move that came actually between the two spikes. And since then, older coin volume has been receding. So what we can infer from that is that the majority of the activity on chain remains younger coins. We can corroborate some of that statement that younger coins are dominating the volume by looking here at long-term holder supply. Long-term holders are one of our key cohorts that we pay attention to in bull and bear cycles. We noted that at the all-time high, as expected, some of them began to distribute. This months-long accumulation by long-term holders began to smooth out and flatten. There was a bit of distribution at the highs, which is exactly what long-term holders do. They sell at new prices. They did it back here when price broke the previous all-time high around 19.5K, the end of last year. This was when long-term holders had their recent distribution event. We were looking for something similar here, and the remarkable thing about this current move is that long-term holders are not selling with this same ferocity. There was a bit of distribution, but it's very tame. It's very controlled, and that is what has led me to say that long-term holders appear more patient and to be desiring higher prices. I did have a question from someone on Twitter asking me why long-term holder supply being at its highs is bullish when in previous cycles long-term holder supply reaches the highs in bear periods. So I want to address that question. Here's long-term holder supply zoomed out, and we can see that they do reach high levels in bear accumulation periods. That's absolutely true. The highest points of their owned supply come in accumulation. But what what usually happens is that when price breaks a previous all-time high, long-term holders start distributing very heavily. They've done this in every previous market cycle. I wrote an article about this on glassnode.com called Follow the Smart Money, and I'll leave a link in the description below for you to dive into that, see some of the cool charts that I created, and I explain this process of long-term holders cycling in and out of supply. What is bullish about right now is not that long-term holder supply is at a high. It's at highs in bear markets. What is bullish is that long-term holder supply has not rolled over and begun going down like this. It has stayed pretty much sideways. It's gone neutral. There's some coins leaving at the same time as there are still older coins from back here being absorbed into this group. So they are at a net neutral state right now. They're not rolling over and in mass distribution as a group. That is what is bullish. Their sentiment remains confident. They are not yet ready to exit the market, which means that these prices are not good enough for them. So we've got a bullish dynamic in long-term holder supply. Here is illiquid supply shock. We've looked at this a bunch throughout the course of this channel, and many of you might be pretty familiar with this chart by now. This is representative of the hodlers. So long-term holder supply is based on how long you've held your coins. If you hold them for long enough, for enough months, we consider them long-term held. And the longer a coin is held, the more likely it is to continue being held. So that is one key cohort. Illiquid supply shock here in this blue line is based on spending history. People who are part of illiquid supply have a low amount of outflows in their lifetime history on chain. The majority of their coin activity is inflows. So they are hodlers, they are dollar cost averagers, they are sat stackers, they are people who buy Bitcoin and tend not to sell it at all or very little. Illiquid supply has been on the aggressive uptick for most of this recent market cycle. There was a distribution event in May as much of the market sold off. A little bit of this group sold. Relative to their size, a very small amount of it. But nonetheless, some of them sold. And they were also one of the first groups out of all of our many supply cohorts who began accumulating in the summer bottom. They really started building their stacks in early June and late May, before some of the other groups that we look at. And right now, illiquid supply shock is setting new highs for this market cycle. They're not all-time highs. You can see back here in 2017 and 18, it had a higher value, but it's currently at its highest value since that market cycle, since over 3 years ago. And if we zoom in a little more here, there's a dynamic that I'm watching right now that's a bullish divergence. We mentioned this a couple of videos ago, but it's still in play, and I want to mention it now. Earlier in the summer, we pointed out a bullish divergence here. This was the crux of one of our initial videos on this channel about our thesis of a supply squeeze that carried us out of the summer. We saw illiquid supply growing, the supply held by strong hands growing as price was showing weakness. These are strong hands buying the dip. We got a rally through August and September, and then a pullback here near the end of September. During this period, another bullish divergence in illiquid supply shock. Strong hands growing their stacks while price was showing weakness. Again, buying the dip. We get another rally up. Strong hands keep buying as they always do, and then we get another pullback here after the double tap of the new all-time highs, end of October, early November. We're getting some weakness here the last few weeks, and another bullish divergence in illiquid supply. Hodlers are still stacking coins. We are at all-time highs, essentially creating new price discovery, and in these moments, hodlers are seeing opportunities to buy more corn, to stack even higher. So from these perspectives, from long-term holder supply and illiquid supply shock, the market still looks to have much more strength left in it and much further to go before the hodler classes feel the need to realize profits. That's what I'm seeing so far. Whenever new prices are created, there are always some market participants that buy the top. A few of those people may end up holding on to their coins for the long term and becoming hodlers, becoming long-term holders. But most of the time, people who buy local tops end up selling shortly after. Price pulls back, they see weakness, they don't have confidence because their entry was terrible, and they sell out. As Bitcoin continues making these little rally moves. We occasionally need to shake out some of these weak hands that buy the local tops. If you look here in September, we had an event like that. We got this rally out of the summer after realizing a couple of months of steady losses on chain. Got back into profit. We got a rally through August and September, and then we started a pullback in September after some futures flushes that we covered extensively on this channel. And as we started to see price pull back, some of these people who bought the top in September, who bought the euphoria of El Salvador's Bitcoin day and the days following, some of those people needed to get out, and they realized losses. You can see these red prints here. It's just a little tap, a little dip below the break-even line. It's not mass loss realization like this big wick here. It's just a little dip, just a few hands that were sitting from this top that were waiting to get out. You let those people exit, the market clears the room of weak hands, and we move forward. We need to shake out the paper hands. It looks like we're getting a bit of that activity now as price is pulling back from this second all-time high break from the beginning of November. We're seeing some weakness in price. Let me zoom in a little bit. Seeing some weakness in price, lowered profit realization, and now a bit of loss. If you carry your eyes over here to this red chart, this is the realized loss from this chart here, from the P&L. And there's been a big spike of realized losses in the last couple of days. Honestly, this is good. We need this to happen so that these folks who were waiting to get out can get out. For the market to move forward, those without conviction need to be cleared out of the way. This is the behavior we're seeing here. And these spenders are short-term holders. Long-term holders are largely in profit. And the majority of them, as we've shown from these previous charts, the majority of them are not selling. They're just kind of sitting neutral and waiting to see what happens. Most of this loss realization here are short-term holders. And for them to be in loss at these prices means that they bought recently. Very recently. If we look down here at this purple chart in the middle on the bottom, this is the spent profit ratio of short-term holders. This is one of the ways that we note the sentiment and the confidence level of the spending of short-term holders. And it's a great bellwether for market strength. Let's break this chart out a bit and look at it in finer detail. Okay, here is the short-term holder spent output profit ratio. This is a great way to note the momentum and strength of activity on chain. Short-term holders are the ones who buy the tops, and their outcomes give us an idea of where the market might be heading profitability-wise. Note how back here in September 2020, this is really when the bull market started. We started pushing forward. Price rallied up into November and consolidated here at the previous all-time high around 19.5K, this point right here. And as we broke out of this area and really the bull run began in earnest, the profit taking of short-term holders began spiking higher and higher as they take more and more profits. And each time it comes back down, it's hitting the cost basis. It's bouncing off of break even or above it and continuing to rally higher. Short-term holders are not realizing losses. The market is strong enough to absorb any spending and continue forward. And you get these bigger spikes and higher lows in short-term holder spending. And it creates this kind of belling out of short-term holder spending. And then around this point here was really where things started to slow down, even though price continued on for several months. We started to get lower highs in short-term holder profitability. You see how the spike goes up. It really hits an apex here in early January, and that's when it started to recede. And we've talked about this moment in detail on this channel. This pullback and subsequent rally from 40K after price doubled from 19 right here. It doubled in a couple of months and pulled back. This moment is where whales sold. This was where a lot of long-term holders distributed. This is where a lot of miners distributed. It was also a place where a lot of on-chain activity, transaction counts, active entities, things like that started to recede from this moment here, even though we had several more months of price action in the highs. This point was really the on-chain top, and you can see it corroborated here in short-term holder spending as it declines precipitously from this point. It starts going down, we start setting lower lows until we reached the capitulation point here in late May. And then we spent a couple of months underwater. Short-term holders have trouble getting back into profit. Every time they get back up here, a few sellers show up and shove them back down. And then finally, we get back into a state of confident profit. Most of the sellers have been shaken out. We start setting higher lows, and then we start setting higher highs on the tops here. You see profit slowly increasing. But the difference about this phase compared to back here was that in late 2020, we saw saw profit taking spiking heavily as price was just ripping, right? This is a euphoric bull run. Then we get a bearish divergence where price is continuing on, though it is slowing down, price is continuing on while profit taking is declining. So this is a bearish divergence that if I was watching at the time, I was not studying on chain at this point of the year, but I would have noted this is a bearish divergence. And this is a kind of a warning sign that the market is losing strength. Well, now over in the present rally at the end of 2021, we're seeing price steadily rising. So it's not ripping like it was here. It's rising steadily, and we're seeing profit taking rising steadily. We're not getting big spikes of profit taking. It's just a consistent rise up, higher highs, higher lows, and it's just a positive channel grinding its way back up to the positive. We did get a bit of loss realization here, but it's part of the higher lows pattern that we've been setting since the summer. So right now, this structure is still intact. We haven't seen a real capitulation out of short-term hands, and we may not, but we have gotten a bit of loss from this group. And this is good to see. This loss realization by short-term holders right here is this little red dip. And this is what we need. These are the paper hands right here that bought these tops. We need to shake them out. Get out of here. And while this is the spending of short-term holders, this line here is their cost basis. So this is all of their coins put together, including the ones not being spent. And we did look at this in the previous video, but it's important to mention it again now, especially since we haven't spoken in a few days. Just as we were looking for this spending of short-term holders to realize some brief losses and then continue on into the positive, we're looking for the cost basis of short-term holders to catch a bounce at break even. So there are still a few short-term holders that are sitting in profit. They have coins from back here. Those people are keeping this line from touching the black. What I'm expecting is that sometime in the next few days, we get a bounce off of this value here if we are in a bull market as we suspect, because what that would signify is that confidence remains in the market, holders are not willing to realize further losses, and buyers have stepped in to push the price forward. It's the kind of behavior we saw here at the end of 2020 as the bull run began in earnest. We got a bounce on the short-term holder cost basis. It happens frequently in bull markets, and it's what we'd expect to happen here just as it did at the end of September. So if we get a bounce on this value right now, short-term holder cost basis is just shy of 53,000. And we noted in the last video how 53,000 is basically this yellow line here that we said from a technical perspective would also provide bull support if we were to test it. So we've got some confluence now between technical analysis support on this price chart here and on-chain analysis and support from short-term holders cost basis. This is the kind of signal that we look for, the kind of overlap between technical and on-chain indicators that can help us get an idea of where to look. In the next few days, this is the place I am going to be watching closely. It's not a guarantee that we'll see that outcome, but if we are in the bull market that we believe we're in, then that's the activity that we expect to see. We have a question from one of our viewers. Astro Zombie asks, I was wondering maybe someday if you could touch on the subject of whale cohorts and analyze their behavior. I know we focus on long-term holder and short-term holder dynamics, and they're quite important. I think we could also keep track of whales to have a different perspective and analyze their history. Well, Astro Zombie, you are in luck. Here is the change in whale supply. So what we're looking at is the price chart overlaid with the 14-day change in whale supply. When you see red dots, that means that on a 14-day period, whale supply has been growing. When you see blue dots, whale supply is retreating or diminishing. This moment here, this cluster of dots right here in December, this is when price was consolidating at 19.5K, just under the previous all-time high. This was the moment that price was coiling underneath the all-time high before the real breakout. You can see this moment here basically since the bottom in March of 2020, after we had this liquidity crash. This was really when the whales started buying. Just look at all these orange prints all the way up to this consolidation point, whales buying. And in the background here, this gray area chart in the background is the actual supply of whales. So you can see it moving in corroboration with these orange dots. But look at the growth of this group all the way up to here. They really consolidated for a bit. bit. There was a bit more buying. Really, they accumulated heavily throughout this rally. They also sold the top, and they sold the top in January that we mentioned earlier. This point right here, where short-term holder profitability started to recede, where long-term holders sold, where miners sold, this is where whales sold. That's this moment on the price chart right here. So whales dumped a bunch of their supply, and you can see it receding here before we even got to the proper market top. They sold in January and early February. One other factor it's important to call out is grayscale. So during this period, during this rally period, the grayscale fund was taking in a lot of new capital inflows, and they register as a whale entity on chain. At their height, the Grayscale Fund had about 650,000 Bitcoin. And around the beginning of March, the inflows ceased. And the trade, the arbitrage trade that had been driving a lot of the speculative interest, that trade dried up. And it's part of the reason the market bowed over here and we got a top put in, because a lot of the strength leading up to the top was propelled in part by the Grayscale arbitrage. There was whale buying, entities themselves buying. This wasn't only Grayscale, but Grayscale played a large role. And it's no longer a factor now in the second half of 2021. But last year and into this year, Grayscale was part of the reason we got such a strong rally. And what we've seen in the last couple of months is that whales have been growing their stacks, but less aggressively than last year. So they really helped propel some of the rally from last year. The aggressive buying by whales is part of the reason why price was so quick to recover from 5,000 all the way up to 40,000, was because of aggressive whale buying. We also had retail interest. There were a lot of market participants at that time, but whales were playing a large role. They sold the top, they helped put the top in, and they also helped encourage the rally out of the bottom in July. But what's been going on recently is that whales are not buying as aggressively. See these little clusters of red dots? They're more sporadic. They're more targeted. And I think that's part of the reason why price isn't as aggressively rising as it was a year ago, because whales themselves are not playing such an assertive role in the current market. Will they? Perhaps. Who knows what the whales are going to do? They hold a lot of corn. They've got about a third of the current available supply, and they don't yet seem willing to exit. They're not buying aggressively, but they haven't seen an exit point. So we're watching this group pretty closely. I don't give them all the credit. I'm not someone who believes that whale activity is what drives the market, as others do, but they are an important cog in the machine. So the takeaway from this chart for me is that in the 2020 and early 2021 bull run, whales played an outsized role. Their aggressive buying is part of the reason we were able to break into 40 and 50K so easily. They sold early, they sold in February, and their buying this summer, since the recovery, has been much less aggressive. So that's what's going on with the whales right now. Nothing to really write home about, but I did think it was interesting to note just that their current buying is more sporadic than it has been in the past. And that's not necessarily a bad thing. So we've noted that whales are not playing an outsized role in the current market like they did last year. We have noted that short-term holders are looking for a bounce on their cost basis, around 53,000. It's a behavior that we've gotten in previous bull markets to show confidence. And if this is a bull market, as our thesis states, then we should expect to see a bounce here sometime in the next few days, maybe the next week. If we were to surrender this value and break significantly below that, our thesis would be tested and we would need to reassess. But I have confidence that this will be an area of support. The 53,000, because of its importance here on chain, its importance to the short-term holders, and its significance from a technical perspective, that this should likely be an area that we would find support. This zone here should be a place that we can expect to see some support. We have seen some loss realization. It's from those short-term holders. Those are the paper hands that we're trying to shake out, and we're getting a bit of that. This loss realization that we're seeing is healthy. We need some loss realization in order to get rid of folks who have no confidence so that the market can resume its normal activity. We've noted that long-term holders had a bit of distribution but are holding strong, and the fact that they have remained near the highs of their supply is what is bullish. It's different from their past behaviors of quick distribution at the all-time high. We've got a confluence of factors working in our favor right now. We have strong hands remaining strong, we have loss realization of weak hands, and we have a setup for a potential bounce bounce on the short-term holder cost basis in the next few days. If all of those things play out, then I expect to see higher prices in the near future. If we get the opposite, then we will hit the charts and reassess and test our thesis. All right, that's what I wanted to talk about today. It's been a few days since we looked at the charts, but not a lot has been happening, honestly, and so much of what we're looking for remains similar to what we were looking for last time we spoke. We're watching short-term holder spending, and 53K remains a key level for us to hold in order for this bull market to continue, in my opinion. Make sure you follow me on Twitter at TXMCTrades. That's where you'll find a lot of my analysis. I post articles, I go on podcasts. You can find all of that stuff on my Twitter page. If you have any questions or comments, make sure to leave them down below and I'll read them as I do after every video. We'll check back in near the end of the week and see what's been progressing. We'll see if our bull market thesis remains intact or if we need to hit the drawing board. I still remain very confident. Until we speak again, take care of yourselves, friends. We'll chat soon. Cheers.